Good afternoon, everyone, and welcome back. Welcome back to our Prairie Grains Conference today. Our 12:30 breakout session here is going to be primary and alternative crop budgets and markets for the 2021 planting season. With us, we have Tjosaas and Betsy Jensen, Farm Business Management instructors at Northland Community and Technical College. Please welcome them.
Good afternoon. Welcome, everyone, to our breakout session. Josh and I are going to tag team on this session. Say hello, Josh.
Hello. How's everybody doing today?
Okay, just want to make sure your audio works. All right. So today we're going to cover marketing plans. I'm going to talk a little bit about that. Josh is going to cover some expenses, and then I'm going to come back and look at the wheat fundamentals. And we only have 30 minutes, you guys. And so hold on to your pencils, get ready to go, because this is going to fly by in 30 minutes. And so Josh and I every year come here and lecture you guys about the need to have a marketing plan. And this is probably some of these common marketing mistakes and issues. And all of you guys have fallen trap into one of these. Maybe you don't have a plan, you don't follow it. Storage, that's a huge thing. Grain bins to me are wonderful facilities to have on your operation, but they're not supposed to be hope chests. And so if you do have storage, you do have to have a plan to stop storing that grain at some point. Not understanding or knowing your cost of production. This is where Josh and I come in. We do this all year round, help you guys with your cost of production. And it gives you more confidence to make the sale. I know we can't always meet your cost of production. That's the reality of farming. That's why we don't raise just one commodity. But knowing your cost of production is definitely something that gives you confidence in your marketing plan. Also, updating your cost of production. I know in my neighborhood, and I think in the valley in general, I can't really speak for western North Dakota or Montana, we did not have the greatest wheat yields this year. And so our cost of production on wheat actually went up, which is disappointing. We're not getting close to hitting that cost of production at this time. I don't know that the wheat market will give us the opportunity to sell at a profit this year. It's going to be a tough road for wheat. Waiting for the highest price to sell. We got to talk soybeans for a minute. Raise your hand if you sold soybeans too early. Okay, there's probably a few of you out there. And you're jealous of those who still have soybeans in the bin. But I will remind you, they might still have soybeans in the bin next spring when they're worth $8. We don't know where the soybean market is going to go. Just because beans have gone up, it doesn't do you any good unless you actually sell those beans. You may actually sell those beans, even though you sold for $9, $9.50, whatever it happened to be. That might end up being better than a lot of your neighbors who are still holding on to that and waiting for beans in the teens. We just don't know where the market's going to go. And so I have a question of you guys. I've got a few guys that still have a lot of beans left. And I said, what's your plan? Well, no plan. I mean, it's worked well so far. And so they don't have a plan. They're just going to wait it out, and hopefully the right price comes and hits them on the top of the head the day we're supposed to sell. Also, not being flexible with your plan and pricing levels. There was some freeze damage this year. So on soybeans, it was unfortunate if you sold the beans and then ended up with less production than you expected. So your marketing plan does have to be flexible. This isn't built brick by brick. It has to be adaptable. Another common problem is that you don't understand the kind of tools available for marketing along with the risk and rewards with each. And I had a funny conversation with a farmer the other day, and he wanted to set a price for spring wheat. And he decided $5.45 cash. And he said, so I can lock in the futures and the basis? If we go back in history, I think that's probably the most common type of marketing tool that we've had, but a lot of guys have switched to doing a basis contract or doing a futures contract. And we kind of forget that we can do them both at the same time. If you just want to lock in a flat price, that's fine. Also, some of these complicated contracts that are out there, some of them are really good. Some of them are not so good. And you have to understand if your local grain buyer is offering you some of those hybrid contracts, what are the risks and rewards with each one? Selling only on emotion. Oh my gosh, it is so hard to sell in a down market. And that's what has me a little bit nervous about soybean growers right now if they're still holding beans. When are you going to sell? If $11 isn't enough for you, when will it be enough? And if the market does start to go lower, to me, that's a very difficult time to sell. And then also selling only when you need cash. We work on this as farm management. We sit down with you and we go over your cost of production and your cash flow. And if you have some land rent due this fall, or if you have soybean, or you got principal payments due on loans, we certainly want to make sure you have the cash available. And so we want to plan ahead for that and not try to figure out how to make those payments. We want to plan for that in advance. This leaving grain in commercial storage indefinitely, this happens. I wish we had a grain buyer on here, because I think they would probably laugh at how often this does happen. And I'm not talking 2, 3, 4 months. I'm talking 12, 13, 14 months. Crop that actually celebrates birthdays in an elevator somewhere. This is very common in grain marketing, and it gets pretty expensive. Once again, those complicated contracts. Number 13, you're trying to beat the odds. There is a lot of seasonalities in the market, and some years you can beat the odds. Some years it works against you. But there's a pretty good layout for how to market your crops, and trying to beat the odds is very, very difficult to do. Number 14, this could be a curse this year in spring wheat, rolling your basis contracts forward in a carry market. Like I said, a lot of guys like those basis contracts, but if the market has a full carry, so if March futures are higher than December and May is higher than March, rolling contracts ahead really can add up quickly when you start taking off 10 cents, 15 cents every time you roll it. Number 15, not selling enough or selling in too small of increments. And I think one of our instructors from down south, he had a good example, and the farmer was so proud. He had he had forward contracted some soybeans. This was a year or two ago, and he was so proud. And the farmer or the instructor said, "That's great. Let's put that in there. How many bushels did you sell?" And he said, "I sold 500 bushels." And this guy raises about 70,000 bushels of beans a year. And the instructor snapped back, "You spill more than that in the field," and kind of snapped at him. So the farmer was so proud of his forward contract. But boy, he really did not sell much at all. And so you got to make sure that you're selling appropriately to the volume that you're going to be raising. All right. So what we're going to do, I'm going to turn over to Josh, and he's going to go over some of our spring wheat numbers.
So real quickly, we can go to that first page here. This is going to be our spring wheat 2019 actual information from farms in the Red River Valley database, both on the Minnesota and North Dakota side. And what this is going to show you is kind of a little bit of the range that we see in yields and the range for all of that information. So selling prices, other crop income, gross return per acre. If you want to click to that, Betsy. And then we kind of have the average numbers is what gets printed in the Red River Valley database. So you can see quite a range on yield with 25 bushel to 92 bushel average crop to our 62 bushel average. You can see the value, quite a bit difference on value. Again, we get some of the last time in 2019, we had some quality issues. So we saw some lower quality wheat priced in there. And of course, we had some wheat that sold for over $6. And then these other crop income, things like hedging gains, crop insurance. Some people, the straw income goes in there as well. On average is about $51 an acre. So the gross return is right around $400 an acre for the 2019 crop. And this is the information that we use to help guide for our 2021 information. When we move to the next slide is our expenses. And this is going to be like our seed, fertilizer, chemical, crop insurance. There's a little bit of drying with the 2019 crop, fuel and repairs. If we click to that, again, you can see those ranges in there. Anytime you see the zeros, obviously there's some situations where there wasn't any drying, like fuel and repairs. Everybody asks, well, how can you get somebody that has a zero? Typically what we see is that's a lot of times beginning or young farmers that are exchanging labor, or they might have a custom hire expense where they're paying dad or grandpa or uncle to do the actual work, and then they're paying them a custom hire expense so they don't have a direct fuel or direct repair expense from that. So, with that, that's why we get those ranges in there, and you can see the averages is what's in the parentheses at the end there. We'll move on to that next slide. So these will be additional things like custom hire, land rent cost, and see, this is the one I know that always gets to be a debate when we're at Prairie Grains is when we put in a land rent cost or a land cost, some people come to me and say, well, that's way higher than what we pay where we're at. Obviously, that's one of the keys of being part of the program is everybody has a different cost there. And in fact, you can see everybody has a different cost in almost every single one of these categories. Averages kind of say that's the average of the whole group. And you can see the different land costs from down to $30 per acre, which is probably just real estate taxes or a little bit interest if you're paying on loans, up to over $200 an acre for land rent. And again, you get those machine leases, operating interest, you see those zero numbers. Again, there's going to be some farmers that just don't have to borrow any money, and they're able to farm without having to borrow any interest. And then our miscellaneous these would be direct related costs. Sometimes these would be grain taxes, those kind of items that get put into there. So again, a lot of times that may be miscellaneous when we see this under the direct category versus when we move to the overhead category. But you can see total direct expenses anywhere from $118 all the way up to over $500 per acre. So you get to a pretty high end, you better be getting pretty high yields and pretty high prices to be able to afford to break even on those. So average is about $339, which with that about $400 leaves us about $70 for overhead expenses. Overhead expenses here would be like hired labor. So this would be typically if somebody had a hired man or worker on their farm and they're going to be spread out over all their acres and for all the crops, machinery leases, these would be things that are used on the whole farm, not directly related to a specific crop, building and or bin leases or bin rents, your farm insurance and utilities. And again, you can see all these have zeros on the one end, and you can see kind of our middle range. I know I'm running through these very quickly. Our presentation will be up on the Prairie Grains information site, so you can access the full presentation there. But I really wanted to get to kind of our summary for the 2021, because I think that's what everybody wants to look at. We'll move to the next slide on overhead expenses. So dues and professional fees, interest, machinery building, principal payments. So these would be like your machinery payments at the John Deere dealership or to the bank. Miscellaneous, these would be overhead miscellaneous expenses that aren't attributed specifically to one crop. So you can see total overhead anywhere from $9 to $135. Average is about 68. Total direct and overhead was about, on average, $407 per acre. So if we click to the next slide for 2019, these would be our net return per acre was anywhere from losing $200 an acre to making $246 an acre. On average, we saw on rented land a positive $5 per acre for the Red River Valley. And then we had government payments. Now this is 2019, so the government payment income that actually came in 2019, there wasn't a lot to be some ARC PLC information in there. Obviously, we know in 2020, there's going to be significant differences with all the government payment on money that came in. But we're going to have some that's directly related to the 2020 crop, some that really should be attributed to 2019 when we talk about the CFAP 1 program, the early MFP payments in January, February, and even the ARC PLC that happened this year really is a 2019 income or attributed to the 2019 crop. So you can see as we get to the down, the net return over labor and management and family living, again, we still had farms losing about $250 per acre to gaining $212 per acre. And this is an expense that varies from farm to farm of, we put an associated labor and management cost and adjusted cost in there for us. So we do put that in for people to look at. And so that's one of the things that we try to consider our farm. So what is the cost, whether it's directly to family living or it's a labor and management cost as well. The next slide, if we go to that, and I lost the slide on mine, Betsy, but
yeah, I lost it too. It appears I don't have internet at this time.
Oh,
lovely. Yeah, can you share your slides? Same presentation.
Let me go to speaker view, share screen, and let's go here. Okay, so you should be seeing the presentation here. This is our 2021 projections. And so you should be seeing wheat, soybeans, corn in the first 3 columns, and then we've got sugar beets. These are non-joint ventured sugar beets, sunflowers, barley, edible beans, seed soybeans, and then old crop. And I use the term old crop, but this would be hay that's already been established, so you're not putting new seeding in. And so we use that. When we take the yield per acre, we're taking kind of the averages that we get from the Red River Valley database. So obviously we look at some of these numbers, and that's going to be very different from farm to farm. As we move up and down the valley, we're going to see a lot different if we focus on wheat, a lot different yields in the southern part versus as we get further north. The prices for wheat, soybeans, and corn on this that was the price I was able to gather today, early this morning. That is the September price for 587 September wheat, 1053 November beans, and 412 December 2021. And then I'm just taking a typical basis off of this. Obviously, there's some elevators now that are bidding better than 75 cent under on soybeans. There's some that are, close or better than this 55 cents here. And there are some elevators actually bidding 30 cents under on the September wheat already. So that gives us our price received is calculated there. For the other categories, we're taking that from FSA planning prices that we receive. We're part of District 1 and District 2 here on the Minnesota side. So those numbers are the information that they give us. And then these yield numbers are things that we're pulling from our database from whether that's the Red River Valley or if it's a crop that isn't there, either the North Dakota data or the Northern Minnesota data. The seed expenses, fertilizer, chemical insurance, fuel, repairs, custom hire, all of that is coming directly from the information we presented to you in 2019 with slight tweaks for the 2020 year. The things that I wanted to identify, because every year I get questioned on that, is if we look at this land rent cost, I put $140 per acre, figuring that's a little bit of kind of the center part of the valley to a little bit southern, closer to my area. Obviously, I know there's people out there that could be in North Dakota, Montana, or way northwestern Minnesota or northeastern North Dakota that say, my land cost is way lower than that. That's why it's critical to put this information together for your individual farm. So obviously, if you say your land cost is $100 an acre versus $140, well, you just add $40 to the net return number. Or if your land rent cost is only $60 an acre, you add $80 to that number. In the end, it's just they could show positives, but really the relationship between each other is still the same. The other thing I want to highlight is there under the overhead expenses, there's a bold no LM on it. And what that means is there's no labor and management that's been associated to this. So no family living expense. Again, this is the one area that I get a lot of people say, well, I don't need, $40 an acre to live off of or $30 an acre. I only need 10. Or, some farms that they have their full-time income off of the farm and the farm is a part-time occupation for them. Or not their main source of income, so they don't rely on the farm for any family living expense, then that's a zero. We still would put a number in there for them in the idea of what could they hire somebody to do their portion of the job if they weren't there, to make sure that the farm is still productive for that. But that number is not included in there. So if you were to add a typical number in there, some of these green categories would probably turn to red or be very narrow margins. The one discussion I had with a few farms in my area was, like we see this high number on the sugar beets, but this is a non-joint venture situation. So if you have a joint venture of $250 and you're to put that in here, that's showing a loss of $34 an acre. So, understand that there are some things that are missing in this. Obviously we see right now, soybeans looks like a possible soybeans, the edible beans, the seed beans look to be our highest net returns, the established hay. Wheat right now at current pricing levels, and again, that's taking a snapshot of today's prices. Obviously, if we were to lose 50 cents on beans and gain 20 cents on wheat, things would change a lot significantly when we move to that. So that's kind of the outlook for the 2021 information. I wanted to turn it back over to Betsy to talk about, can we make money at these levels? I think this was a quick slide for mine, and then I'll turn over to Betsy. Minneapolis wheat, 582 historically, basis 30 cents, 550. You see here we are at 557, 978 and 357. What I wanted to highlight is right now FSA for Minnesota is saying 525 planning for wheat, $9 for soybeans, and $350 for corn. And so that's anything that's not priced or contracted for 2021. That's the numbers that we use with people's cash flows. That's the numbers that most of your banks would use as well. If you're on the North Dakota side, and obviously in Montana, their numbers are different. I can tell you on the North Dakota side that, we're probably about $5 wheat, if I remember correctly, about $8.80 on soybeans, and I think they're about $3.40 or $3.30 on corn. So it's a little bit lower there on the numbers that they look at. So obviously we look at, when is the ideal pricing time? When was the 2020 marketing highs? And this is looking back at the actual December contracts for wheat and corn and November beans. So the 20 beans, the 20 wheat, the 20 corn, and we've now moved into March for most contracts. But 603 September 16th of 2019 was the high for the 2020 pricing. Obviously, we've got some prices now for 2021 where we hit December a little bit higher than that. But for the 2020 crop was actually the previous September. December corn, 428 and a half. That was on November 18th. So this is a non-typical season where it actually happened right during harvest, or in some cases after people had harvested, we actually had the highs. That's usually a unique situation. And then soybeans, November 20th as well, 1059. I use that November 20th because at that point, most elevators and most contracts moved to the January contract. So there was a higher price after that point, but not for the 2020 contracted. So if you'd have kept it into old crop and carried it over, the November peak wouldn't be any higher because elevators weren't using that. So the January would have went higher, and the cash price that would have been earned would be much higher from that as they move to the January. But those were the contract highs. Again, we see in corn and soybeans that happened after harvest was completed, which in almost every of the last 7-8 years that I've been doing this is opposite of what we're used to seeing for marketing. So I'm going to move it over to Betsy.
All right, I'm back.
I don't have the most updated one, so she's going to be using mine that has some notes on it.
Actually, I'm going to switch back to mine again. Is that okay?
Okay.
Sorry, Josh. I don't know what happened to my internet. It disappeared on me briefly, but I'm back now. Okay, so let's go ahead here. Let's take a look at wheat prices. And this is my trick for the day. This is actually from July 5th, 2017. And so I only have 10 minutes left, and we're going to talk about market fundamentals. And I'm throwing this up there to kind of give you guys an idea about soybeans right now. We're not going to go over the soybean market, but I want you to think about what you thought in July of 2017. You could deliver wheat off the combine for $8.19 futures, okay? But if you were looking to contract for next December or September, it was only, and I say only, $6.80. So it's really hard to sell wheat for only $6.80 when the nearby was worth almost $8.20. And we kind of have that similar situation in soybeans right now. Why would I contract, cash soybean prices for next fall are over $9.50. In most years, we would be dancing at that price level. But this year, why would I contract beans for only $9.50? It's amazing how our perspective starts to change a little bit. So just keep that in mind. We've had similar, wheat doesn't normally go into an inverted market. This year it did, or in 2017 it did, but just as a reminder of what can happen. So let's look a little bit about keys to wheat marketing. We're going to focus on wheat marketing. We do have a full carry in the Minneapolis wheat market, and wheat is kind of relying on the other commodities to pull it higher. And so basically, we got to go with a rising tide lifts all boats. Wheat by itself, not real impressive. But if we can throw in some bullish soybeans, some bullish corn, maybe the tide will rise and help bring wheat with it. But we really do need to talk China. And China is a tough one. So I got this off U.S. Wheat. U.S. Wheat does an amazing job of keeping track. They make the greatest graphs for you guys. They're free of charge. Go take a look at them. There's no point in you poring over the USDA numbers when U.S. Wheat does such a nice job. And this is a report actually from November. So if you remember, we did have a USDA report that came out today at 11 a.m. Actually, wheat was the most bullish thing on that report. We don't get to say that very often either. So it's a fun day to talk wheat. It wasn't bullish. It wasn't that bullish. It was just the most bullish. So if you look here for the 5-year average, China's way down here. I mean, China's number 8 on the list as far as our top 10 customers for U.S. wheat. Some years they buy, some years they don't. We never know what's going to happen, but we don't rely on them like we do for soybeans. Soybeans, China's definitely the number 1 buyer. Wheat, some years they're in, some years they're out. This year, so this is as of November 12th. This is a commercial sales report. China is number 3. This is for top markets to date. And so if you look at what they bought last year for delivery, that's in the blue chart, 194, I'm assuming this is 1,000 metric ton, 1.7 right now is what we're looking at, 788% higher than a year ago. And if we go down to the bottom of the chart, wheat overall sales are up 10%. And so China's in the market. It's just incredible what they've done. And like it or not, China's the talk of the town. So how did they become that way? This is a chart I put together. If we go back, the first data point is from the 2016-17 marketing year. That's how much wheat they were going to import. You can see it was kind of flat. And then in October, we thought, this is how much they were going to import, 8 million metric ton, million metric ton, and now they're going up to 8.5. This got increased again this morning. And so China is really aggressive, not just from the U.S., but this is from overall wheat imports. They've been very busy buying wheat. Now, the bad news I want to tell you guys before you get too bullish on me, China now has over half the world wheat stocks in their possession. China is the grand holder of almost all the wheat, and that's a little intimidating. We don't know what they're going to do or why they're stocking up, but it is a little scary for us on the wheat export market. Is how much are they going to continue to buy? So I do want to look at a little bit. This is Minneapolis versus Chicago. This is not today, but this has been kind of similar for most of the year. Chicago wheat, if you look at the December 20 bids, they are trading higher than Minneapolis. If you go out to 2021, they're about flat, okay? So we do have higher bids for 2020, and some guys are wondering, gee, should I do the spread? What should I do? There actually are some fundamental reasons why Chicago is worth more than Minneapolis. This spread is kind of justified for the 2020 crop year. Now you can see for 2021 it's a lot flatter. Okay, we don't have that huge premium for Chicago. But right now with China buying wheat, they don't buy spring wheat. They tend to buy the feed wheat, the winter wheat. They don't need fluffy loaves of white bread. That is not what they make in China. And so they don't need our high quality spring wheat. So I was talking to some Montana producers last week, and one of the questions was, why is our winter wheat basis better than spring wheat? That never happens. Well, there is actually better winter wheat export demand at this point than there is for spring wheat. If we go ahead and look at this, this is our ending stocks by class. Keep in mind, this is still November, this is not December. But you can see hard red spring wheat stocks are pretty much the same. You look at hard red winter and soft red winter, and that's where we see the large drops. Especially hard red winter, we have a lot fewer hard red winter wheat stocks on hand than we did a year ago. So there actually is some bullish reasons why the spread is, or some legitimate reasons why the spread is the way it is. Spring wheat just doesn't have the fundamentals that the other wheat classes do. And so the spread is unusual, but probably not unjustified. Some farmers have asked, what if I went all the way out to July, gave it more time to correct itself? That's possible, but generally selling wheat in July is not a good idea because you're going to lose 30 cents in your basis. And so I don't know if that spread will correct itself by July, but I can almost guarantee you that basis is going to be worse in July. That's just a very strong seasonality in the spring wheat market. So that is what I have right now for the presentation, but Josh and I were hanging around for a few questions. I got 2 minutes left.
We got one question for you guys. Do your sunflower income include anything for oil premiums?
I'm going to go back to that, Josh.
No, they're just the confection prices, so there's not an oil premium on there, no.
Thank you.
So I'm going to say one question I've been asked a few times is how many soybeans do we sell for next year? It's tough to turn down those prices, and that's got to be your own decision. I guess the positive thing is, let's say soybeans continue to take off. Let's say we get 1050, 1150. We can always swap out wheat acres for soybeans if we have to. There's always the ability to adjust our planting tolerances as well.